Good morning, everyone. This is Charles Nemi with our Real Estate Mastermind Group. Today we have a very special speaker making an introduction, and her name is Carol Eubank. And Carol is with Longhorn Title Company in Georgetown. Longhorn Title have been in business for over 50 years. It's one of the oldest title companies still operating in Williamson County. And with that, I want to welcome Carol. Thank you, Carol, and go ahead and take it over.
All right, thank you guys for having me. And I did intend to be here with video, but I really don't know what's happening with my camera today. But as Charles mentioned, my name is Carol Eubank, and I am an escrow officer with Longhorn Title. I started in the title business back in 1983 in Austin. Back about 1985, I had to choose between living in Austin or moving with the man I loved. So we moved to California, but I continued to work in title and escrow all this time since then up till now. We've moved back to Central Texas back in 1997 and have lived in Georgetown since 2001. I've worked for all the many of the big title companies opening and operating title offices in Williamson County. I have also spent a significant amount of time training escrow personnel and also doing presentations like this to real estate agents. So without any further ado, I wanted to get started on just letting you know we're going to talk about title commitments. We'll go over this briefly. I want to go through all the parts of a title commitment because I know that most agents don't really understand what the commitment is for. And I wanted to give you a good understanding because it is very important to know the parts of a title commitment and when it's good to advise your clients to seek legal counsel and when it's okay to contact the title company. So I created something that says, why is it important to understand the ABCs and Ds of a title commitment as an agent? One is because, and for today's purposes, we'll just refer to the residential 1 to 4 family residential contract. But paragraph 6 of the residential contract, so much of that is covered in our title commitment. And then paragraph 6D, most agents aren't aware of this, or if they are, they don't, their clients don't take the benefit of it. But it does allow the buyer to object to anything that's in the title commitment. I've only in all my years had one buyer actually read the title commitment and a different buyer who actually filed objections to the title commitment, which I find very interesting. But even though as a title company, most of us are owned by attorneys, we are prohibited from giving legal advice to anyone. We are a disinterested third party to the transaction, and we remain neutral. So the reason for this is because I think the more you know, the better agents you will become and the better you can serve your clients. And we hope here at Longhorn Title, at least myself, that just making this presentation will help you do that. So Charles has pulled up the title commitment. And a couple of things I want everybody to understand is a title commitment is a title commitment to insure. It's a commitment to insure property based on the information that we've been provided. In order for a commitment to be valid, you have to have the jacket, Schedule A, Schedule B, Schedule C, and Schedule D. And a title commitment is only good for either 90 days of the effective date or when all the requirements on Schedule C are satisfied and the policies can actually be issued, whichever event occurs first. So example, this particular commitment that I've given for a sample today is effective April 18th. This commitment would be good for 90 days after April 18th, or if all of the requirements are met and we close, disperse, record, and can issue our policies after all requirements are met, and say that's April 25th, then the commitment's only good up until that point.
Carol, let me know when you want to move the screen up or down.
Okay, if you want to just go to the top so it shows the commitment for title insurance. Right, that's a great spot. So this is just the front cover of the jacket. What the purpose of the jacket, really, you'll see that it's on this particular case, it has two signatures. It's signed by the title insurance underwriter because we are an insurance company, and it's also signed by the agent. If any signature is missing, then it's not a valid commitment. But it gives you all the conditions and stipulations for coverage. The jacket briefly explains what the title commitment is. It gives some definition of terms, and I'm not going to go over this, line by line. It does explain the area and boundary coverage. We're not going to go over that in this class, but it does give a definition of that because that particular issue could be a class all unto itself. Also explains that mineral interests are not a part of this because a mineral interest survey, title examination is a completely different type. It's not even handled by title companies. It's handled by what we call a landman. And the very back of the jacket and within the body of the jacket are phone numbers for the Texas Department of Insurance, which people can file complaints, ask questions, make sure of the credentials and the validity of the issuing company and its agent, and it's good information to have. So if there was a complaint about, for example, you had a title company that just you didn't feel like they were knowledgeable enough, you could actually call the Texas Department of Insurance and inquire about the credentials. So that's about the jacket. So Charles, if you'll scroll to Schedule A, and just at the top of Schedule A, which is a few pages in, this is still part of the jacket. Schedule A, the effective date. The effective date is the date that the records at the courthouse are good, because what a title commitment is, it's a report. Besides being a commitment to insure, it's a report of what the title insurance company finds of public record, and the public records are good through a certain date, and that's the certified date of the county records. And for this particular case, the issue date is just the date that the title company issued, and then it has their GF number on there. Schedule A reports the actual conditions of the proposed insurance policies, also how the interest in the land is held. For most residential properties, it should be fee simple. Also, who the actual recorded owners are of the property, and the actual legal description. If you'll scroll down a little bit, Charles, just to the bottom of this page where it shows paragraph 3 and 4, because I just want to point out a couple of things. Scroll up just a little bit. At the bottom of Schedule A, just scroll up just a little bit from Schedule B, just the bottom of Schedule A right there. Thomas Seller and Monica Singleton, for this case, are the sellers. If you were representing the buyer or the seller, you would want to make sure that the name there is the name of the seller on your contract. Also, the legal description of the land, make sure that that is the legal description of the property that was intended to be.
Carol, we cannot hear you.
I didn't do anything but sit here, but that's okay. Can you hear me now?
Yes.
Yes.
Okay, thank you. What's important about looking at the legal description is to make sure that the legal description is the property being sold in the contract. Many times, as the title company, we receive contracts that have one legal description, when in fact it may really be the people really intend to sell and purchase the adjoining lot. And oftentimes sellers do, especially in subdivisions, they do own sometimes adjoining property. They might own a lot with the house and then the adjoining vacant lot next door. So it's just really important to always look at 3 and 4 to make sure that matches the information on the contract. Now, if you'll scroll up to Schedule B, Schedule B are the burdens that follow the property. These are all of the items that are found of public record that go with the land, regardless of who owns it. These include restrictions, easements, various restrictive covenants. The list could be endless. But one thing I want to point out on Schedule B is that this is just a report of what the title company finds of public record. We do not read these documents. We do not interpret these documents. These are the documents that we find that may follow with the land on the property. So if your buyers have questions about Schedule B items, they really should seek the advice of a real estate attorney, because we cannot interpret those documents for them. It's just very important that they understand that. But if your title company does not provide your buyer, if you represent the buyer with a copy of the Schedule B documents, at the time or shortly after when they issue the title commitment, you should request that for them, because every buyer, because they have the right to object, has the right to review and understand what may affect the land. One of the scenarios that happens quite often is a buyer purchases a piece of property with a mandatory homeowners association and restrictions. Now, me and my team, we always provide copies of those to everyone, but not every title company does. Buyer moves in, wants to make an adjustment to the property. They did receive the resale certificate. They did receive all of the documents associated with the association, but they didn't bother to read them, which we can lead a horse to water, but we can't make them drink it. But so then they get a notice from the HOA that they violated it, and they call us and say, why didn't you tell us? So, you know, that's why it's important for them to understand, and at least as the agent, make them aware that they need to be reviewing those documents because they're important. The next thing that we'll look at is Schedule C, which is a couple.
We're still Schedule B here, right? Can't hear you, Carol.
I do not know why that keeps going on mute. I said, for the purposes of this and privacy laws, I have not provided actual real names of situations. I've provided real situations, but just not the real names and the real property. But Schedule C are all the items that have to be cleared. These are the requirements that have to be cleared in order for the title company to be ready to insure and issue their policies. Most of the things you're going to see on here should be if the sellers bought the property and have purchase money, you're going to see their purchase money on there for payoffs. Taxes have to be paid. So the general things. In a few minutes, I'll go over this one a little more detailed, just so you can get an understanding of why title companies ask for the information that they ask for and why it's important to know that information. And finally, Schedule D stands for disclosure. We are governed and regulated by the Texas Department of Insurance. The Texas Department of Insurance sets our rules, our regulations, our rates. And in the state of Texas, no title company has the authority to make any changes to those. So part of what has to be disclosed is who the underwriter is and who their officers and directors are. And if there's an issuing agent that's different than the underwriter, then it has to show their ownership, their officers and directors. Then also the title company is required to disclose the estimated title insurance premiums. That's based on the premiums are set by the sales price and loan amount. And so, and those rates are regulated by the Texas Department of Insurance. In the handout that I've provided, which we're not going to go over today, there is a link in there. It says Longhorn Title premium rate calculator. It is a hyperlink. If you ever needed that to save that, I'm sure there's a million apps out there and information for that, but I just provided it for helpful information. So for the purposes of this commitment, what I want to give you is just a little scenario about this particular one so that you will have an understanding of what to look for and when to advise your clients accordingly. So on this particular title commitment that we provided, this is, remember, it's a mock situation, but the listing agent has listed the property. The listing broker has a listing agreement signed by Monica Singleton, seller. Monica told the listing agent she is unmarried, but did not elaborate on the details, and the agent didn't bother to ask. He only obtained the signed authorization to release mortgage information, but without any loan details. The selling agent brought a pre-approved buyer to close on the property in 2 weeks. After the title company performs their title search and inquires about the details needed, this title commitment is what was produced, and this is what was discovered. Monica Singleton and Thomas Seller, who were the vested owners in Schedule A, they were friends. Monica was engaged to Thomas's brother, Marcus Seller, and Monica and Marcus originally wanted to buy the house, but Marcus was actually in prison and didn't have credit ratings, so his brother Thomas generously agreed to buy the house with her for Monica and Marcus to move into. The house was purchased by Hank Sedentary and Gladys Knight, I just made up these names, who were brother and sister, and the elderly widowed aunt and uncle of Thomas and Marcus. Both Hank and Gladys wanted to move to an assisted living facility, and they all agreed, since everyone was family, they would close through an attorney without purchasing title insurance. Since Thomas was a well-established customer of the bank and had more than enough money in the bank to use as collateral, he signed over a CD to the bank as additional collateral, so the lender didn't require title insurance either. They signed a deed of trust, which the deed of trust does pledge the property as collateral, but in this case, Thomas also gave additional collateral. Monica and Marcus were married, but soon after Marcus went back to prison and they divorced. They never moved into the house. But since they stopped making payments, Thomas and his wife, Marjorie, and their 3 children moved into the house. And tragically, Thomas died. So this commitment was generated. Remember, Monica was the only one who signed the listing agreement, so we don't know what happened to Thomas. So we asked for marital history, and that's for a reason. On this particular commitment, there's an old deed of trust from the prior owners, as well as the new deed of trust for Monica and Thomas, but it incorrectly lists Thomas as a single man, which he obviously wasn't. There's a state tax lien on Schedule C that's against someone with a similar name as Thomas. So we would have to investigate to see if that's our person by getting Thomas's full name and usually social security numbers, date of birth. There's also a federal tax lien against someone with a similar name as the prior owner, and a financing statement that was executed by Monica for solar panels on the house. There's also a notice of a lawsuit filed against Monica, and it's just all of our general requirements. So why is this important? It's because this kind of tells you, if we ask for information about prior owners, ask information, confidential information about social security numbers, full names, dates of birth, it is to clear these items that we find on Schedule C so that everyone knows that whether or not we're going to really close on time, but what has to be cleared. And then, of course, we always have to make sure taxes are paid current, the documents are created to be able to ensure the policy. And that's it. Any questions on this? Any questions on what I've covered? Questions? Did everybody fall asleep?
No,
No, Charles, I have a question.
go ahead,
Oh.
Deborah.
Okay, can you guys hear me? Okay,
Yes.
the question I have is, how do you interact with the seller?
It
To
depends on the agent. I mean, the seller in this situation, like a previous seller?
well, the seller in this transaction, because so that the seller might object, the seller might object to what you filed.
Well, then they can't sell the property because it is the seller's responsibility to help clear Schedule C. Those are the items that are definitely filed against the property as far as the requirements that have to be cleared. And they either have to cooperate or they can't sell the property. But how we interact with them, it is better for the agent to allow us to interact with them directly instead of trying to be a middleman, because we can explain why we need the information to them in a simple manner that helps them cooperate. But the bottom line is, like in this particular case, they would have to help us obtain the information from the prior owners to clear their lien. In this particular scenario, even though the names are made up, the prior loan was paid off. It's just that a release of lien wasn't filed. So it's just getting help because in the bank that actually the prior owner had a loan with is no longer in business, but they do have a predecessor or someone who took over for them. It's just helping us obtain that information. They also have to give us all the information for the payoff of the current loan so that we can obtain that, full names, so we can determine whether or not these liens, the state lien and the federal tax lien, are actually filed against people who are in the chain of title. Because the purpose of a title policy is to ensure the holder of that policy that they have free and clear title to the property. So they can't receive free and clear title if there's federal tax liens. What's important to know, state liens and federal tax liens supersede all other things filed on the property. So these actually take priority over the owner's current loan, which if the lender finds out about that, probably in this particular case, because the lender also had a CD as additional collateral, they would just take the money for the collateral, but they're in default of the terms of the loan on the deed of trust just by allowing these liens to be filed against the property. So the seller has to cooperate or they cannot sell the property, no matter who the title company is.
I have a question. You said that a release of lien was not filed from a previous owner, correct?
Yes.
How does that happen? How does somebody close if a release of lien? How did they buy it if the previous owner did not have a release of lien?
Well, if they had purchased title insurance, a release of lien follows payoff. So it's always a post-closing matter. A lot of times lenders were just sending the original signed release to the prior owner, and then the prior owner didn't know what to do with it. So they just didn't get recorded. And that used to happen a whole lot. Now, most lenders are recording their own, so it doesn't happen as often. But in this particular scenario, the parties did not obtain title insurance when they bought it. So there was no title company to follow up on to take care of that. Because usually, like if it was ours and the sellers bought it and got title insurance, we would go back to the prior title company and get them to fix it. But in this particular scenario, since they didn't purchase title insurance, there was no one to go back to but the seller. But it is common for release because releases are filed post-closing. After they're not even received until after the loan is paid in full, which is after closing. Did that sufficiently answer?
Yes, thank you.
Anyone else? Does everybody feel?
That scenario you brought, Carol, was quite complicated. In jail, out of jail,
Yes.
bought something, not bought, married, not married. I mean, that is really complicated. I see why you dig in deep into commitments and titles and encumbrances and all of that stuff. It's amazing.
Yeah, and it really doesn't matter if you represent the buyer or the seller. It's very important to understand because if you're representing the seller, of course, Schedule A and Schedule C are very important to you. If you're representing the buyer, it's all important. It should all be important to you. But the reason I picked such a complicated, because we do get some very complicated transactions, and most people don't really understand what we do, and they don't really need to know what we do as long as we do our job. But I did want to present something that was one of our situations that's very complicated, so that number one, as an agent, you understand the importance of title insurance, because nowadays more and more people, especially if they're paying cash, they're thinking, well, maybe I don't want to get a title policy. These are the reasons that you do, because in this situation, our current sellers did not obtain owner's title insurance. And so they didn't have any leg to stand on to clean all of this up.
Carol, how did the whole scenario finally work out? What was the end?
It did close. Because it just so happens, thankfully in this case, the prior owners were relatives of the party some way. So they were good older people that kept all their documents, and they did find the release of lien. It got filed of record. The vendor's lien that was done was paid off and filed of public record. Just so happens the state lien was not against our owner who died. We did have to go into, we also had to get because they didn't probate Mr. Sellers' estate, we had to get an affidavit of heirship, which did prove who owned it. So his wife, Marjorie, actually had to join in the conveyance because she was the widow and they did claim that property as their homestead because he was an owner. And so she had a community property interest in the property. Monica did not have the authority to sell that property on her own. She was only a partial owner. The federal tax lien was against the prior owner, but it just so happened, even though the attorney who closed the original sale into the current owners didn't do anything about that, she knew she had a federal tax lien and she used her proceeds to pay it off. So it was just a matter of getting a release. Of course, the solar panels had to be paid off through closing because they were affixed to the property, and you can't give free and clear title if that solar panel loan is not paid in full. And then the lawsuit was cleared merely by just making sure everything got paid and the lawsuit got dropped. That was the notice of lis pendens. So it did close, not in 2 weeks. It was more like 2 months, but it did get closed. But it just took everybody working together, which is the key to everything, is everybody working together.
Did I understand you correctly here that there was a tax lien that slipped through the cracks and it found out about it later?
Yes, because remember, they did not get title insurance when they bought it. So the attorney did not do a title examination.
Got it. I saw the house in Georgetown, and as we were getting closer to closing, lo and behold, the seller's name came up as he owes $120,000 in taxes, and there's a lien against the property. They found out it was a person with a different, with the same name, but total different social security number. We had to hold that up for about a week to do the research. It's crazy.
Yes, it is crazy because federal tax liens take priority over everything.
Right. So it's taxes and then liens, and then whatever is left over goes to the seller, right?
Right, right. Anything that prohibits the seller from giving free and clear title has to be cleared prior to closing. If it requires money, it has to be paid through closing, if not before closing. But if it's paid beforehand, the title company cannot close until it's released of public record. A lot of times sellers want to handle it themselves, but if they do, we have to wait until there's proof, recorded proof.